Purchasing a property is already a very stressful process. Finding the right house, the ideal floor, the ideal size, the correct layout. And a lot of people miss out one very important thing is to set your budget accurately or to cater some buffer when you're buying a house. So in today's video, we will actually dive in depth on how you should set your budgets, what are the portions you can use cash for down payment, and what are the portions you can actually use CPF. And if you are in the process of selling your property, you want to complete your purchase before completing your selling, is that possible? So we will be covering all this in today's video so that when you're buying your next property, it is going to be a more smooth sailing process. Today we are talking about what are the costs involved when you're purchasing a property. So for home loan now, in today's market, be it you buy a HDB or private, the maximum loan to value is actually at 75%. So today, if you're buying a HDB property, the banks are using MSR plus TDSR calculation. So you need to actually fulfill these criteria. But in most cases, if you can fulfill MSR criteria and get the loan amount you want, technically most of the time you will actually pass the TDSR criteria as well. Because why? Because MSR, they're only using 30% of your income to service the mortgage loan. And for TDSR, we are using 55%. So technically, you have another 25% buffer to take in your commitment, for example, your car loan or your credit card's commitment. So this is one of the main difference for HDB versus private. So private, we are only using 55% of your total income. So what are the costs involved when you're buying a property? When you purchase a property, you need to engage a lawyer to handle your purchase as well as the convincing with the banks. So for a lawyer fee, if the purchase price is not more than 2.5 million, which usually the valuation will cost about, say, within this range of $300 to $600, but it also depends on your purchase price. Of course, if your purchase price is 3 or 4 million, the valuation fee as well as the lawyer fee will increase according to your purchase price. Next will be stamp duty. Stamp duty, if you're buying a property less than 1 million, is 3% of the purchase price minus 5,004. This is a simplified calculation. But if you're buying a property above 1 million, is purchase price times 4% minus 15,400. So these are the two magic figures you want to remember: 3% or 4% minus 5,004 or minus 15,004 for your stamp duty calculation. So for down payment, if you are getting a bank loan for your HDB or for your private properties, the minimum cash down payment is actually 5%, and balance 20% can be a combination of cash or CPF. But if you are getting a lesser loan amount, example, you only require 55% or lesser, and you want to stretch your loan tenure to 75 years old, the down payment of cash will be minimum 10%. So one of the very common problems we see nowadays is that the selling completion for your property is later than your purchase completion, and a lot of clients might not have the additional fund to down pay the 20%. So what they can do is to actually get a bridging loan to bridge the gap. So for example, for a bridging loan, you can actually bridge up to 6 months period. So in the event, in terms of your negotiation of your buying seller, you are able to negotiate that your purchase complete earlier and your selling completion is in 3 months time. Therefore, you do not need to shift to another property to rent, or your in-laws pays for that couple of few months which you have already sold off your property, and you can use this extended timeline to stay on your existing property while your renovation start on your new property. So another common problem is that with TDSR, a lot of clients might not be able to meet up to the criteria. So what do I mean by they are not able to meet up? So imagine that based on your combined income or your single income, you can't actually secure the loan amount you want for the full 75%. The bank says that based on your income, it's insufficient to secure a 1 million loan. They are only able to grant you, example, for a 750K loan. What you can do is to actually show the banks your net worth. For example, cash in the banks, stock, shares, bonds, or you can actually pledge a sum of money that will help you to increase your loan amount from 750K to $1 million. So far, we have covered the cost involved for your purchase, and how you can potentially use a bridging loan to help you to bridge in the gap. And lastly, on how you can potentially use show fund or pledging to help you to increase your loan amount. So this will all help you to actually set a clearer budgeting for your next purchase. If you need more information on bridging loan, we do have another videos which we cover more in depth in terms of process and how much you can bridge in terms of your cash or CPF portions for the bridging loan. We will be posting the link for the bridging loan videos in the description box, so feel free to check out the video as well. So if you still have questions in terms of how to set your budgeting accurately, feel free to click on the link below. One of my colleagues can actually reach out to you and plan for you the cash flow to help you in terms of your IPA and work out the budgeting on your next property with you.